All right, welcome to another Futures Initiative trading recap. Tonight we have Dubster and myself, and we're going to talk about our trades today, our thoughts for the week, and what we expect to happen. Now, prior to logging in and going through our trading recap, Dubster and I had discussed that we really want to talk about trading psychology. We really want to talk about, what have we learned today, this week, late, and through the past week that has propelled us to success. Now, that's not to say that we are, seven figure, eight figures, six-figure traders. No. Are we getting there? Yes. Will we get there? Yes. It would be unreasonable for us to not get there. With that being said, Dubster, the floor is yours. Let's get it going.
Awesome. All right. So actually, we're going to go ahead and do the recap on yesterday's trade. And the reason why I'm saying this is because since I play off the 1 hour, and as you guys know, I use the healthy order block strategy, there is no setup for me today. There is nothing for me to take this uptrend, and there is nothing for me to go back to the downside. The only thing that I did take was yesterday's setup, and I actually had a continuation for it to the downside. Unfortunately, when I had this tested out, it took me out of the trade once market closed, and I didn't continue this whole trend. But the whole point of this was that I wanted to see if my strategy actually works when I'm holding above the 2.0 ratio, which on the back test that we've done, or that I've done, most of these back tests, as you guys can see, whenever they go below 2-to-1 ratio, they pass a 2-to-1 ratio, it actually goes beyond that. And as you can see, this trade went beyond that, this trade went beyond that, this trade went beyond that. So my next goal as of now is holding full size at the 2-to-1 ratio, but then leaving the runners to on the continuation for a higher run. And the reason why I like this is because most of these trades, when I take them, for example, this one was a winning trade. And as you guys can see, it never took out my stop loss. Continue to the downside. And let's say, for example, we never took this uptrend. We could have continued this to the downside right here and then take a full profit here. We went ahead and took this trade on this specific side. And then we went back up for the 2-to-1 ratio, which in this case is not 2-to-1, 2-to-1 ratio right here. And it still continued to the upside and we could have made more profit here. So the practice that we did yesterday was, or at least the thing we would try to do was we took profit 2-to-1 ratio, but then when it continued to the downside, it took me out of the trade because market closed and I didn't get to do this full run. So the question here is, should I just go ahead and enter as soon as market opens again and continue the downside because I'm expecting it to come all the way down here to grab the liquidity? Or should I just stick to my 2-to-1 ratio? And if market doesn't close by then just let it be. So that's just something I'm going to be testing forward, but let's talk about this entry here. We went ahead and let's move to a cleaner chart. Went ahead and enter off the healthy order block. We see this candle here is a midsection of this mountain. The midpoint of this section here. Oh my God, what happened? There you go. So we know that when it was on the downside, on the downtrend, came down, went back down, went back up, broke these highs, came back down, broke these lows. Reason I entered this healthy order block was because it was in the midsection, but the consolidation that we had behind it was pretty strong momentum to the downside. So when it broke up, it already grabbed the liquidity up here. So I expected a rejection zone and continue the downside, which is why this healthy order block was not mitigated and I actually played it. So this is all based on the back test and the forward testing that I've done. And I've started seeing this consistency where whenever there's a lot of consolidation, it actually has a higher rate of win ratio of a win rate strategy than me taking those losses. So we went ahead and entered, not on these. We never did started positions, but I did enter at the 0.5. And luckily for us, we actually didn't go on the negative for a long time. We just went in red a couple minutes. As soon as it went red against us, we actually went back green and never saw red again. So this was a really non-stressful trade. There was really nothing behind this trade. Just the fact that we entered, it went green almost instantly was very nice. So I just figured that this trade right here was so emotionally, like the emotions were out of the equation to the point where I was not stressed at all. Like as soon as I saw 50 ticks, I took my first contract trim. And after that, moved my stop loss to this line right here. As soon as we saw 100 ticks, I moved my stop loss to break even. And then from there, Fantastic and I were actually, he made fun of me because I was talking about the break of structures, and he's like, which break of structures? And I was just talking about the liquidities that we had at the bottom. But so I was actually targeting these guys right here. I'll show you guys. I was targeting this guy right here, and I was targeting this guy right here. And I had lines here. And when I posted a picture about that, he's like, which break of structure? And I was actually talking about this sell side liquidity, but he knew what I meant. It's just fucking around with me. Other than that, I
Always.
I left my stop loss. This is how I played my stop loss for this. Where was it? I had these highs, and as it was coming down, I always moved my stop loss based on these lows. As soon as we saw these lows down here, I went ahead and moved my stop loss to the golden pocket. So as price action was moving, my stop loss kept moving with it. And as you guys can see, every single time I moved my stop loss, the golden pocket kept moving downwards to the direction where it was giving us more profit. But the whole time it was coming downwards, it never took us out. And that's the reason why I wanted to stay in this trade, because I wanted to follow this strategy and see it as it goes down. When it comes back up, if it hits the golden pocket. And as it continues to the downside, it never reaches this golden pocket. But I just wanted to see how much I can hold using this strategy here. And this definitely would have caught us a significantly amount of profit. Obviously I didn't take it, I didn't hold it. It took me out of trade, but following this strategy was actually really profitable. So I just wanted to throw that out there. Other than that, I did not take a trade at all today. Actually took a quick scalp, but I'm not going to talk about it. It was just a quick in and out. And based on my strategy, I did not take a PA trade today because that PA account that I have right now is only based on the healthy order block strategy. So that is just something that I want to throw it out there.
Very nice. Very nice.
There you go. Yeah. So what do you have, Quantas? What do you think?
So I'm gonna rag on you every time you call it the healthy order block, because I'm always going to call it the ICT Reaper, or
Yeah.
the inversion fair value gap. And let me show you why. Because I saw exactly where you had pointed out, and I saw the entrance, or the entry to it. Unfortunately, I was unable to take that entry because I was at work. But I saw exactly what you were looking at. So if you drop down into the 15-minute chart, zoom in on that on the 50, right?
Right
Now
here.
scroll to the left. Okay, now drop down to the 5. Oh man. Nope, you don't even have to do that. What's that right there, my man?
Can't
What are
remember
we
the
looking
word.
at? No. To the right. What is
Talking
formed right there?
fair value gap right here. Is that what you're talking about?
Yep, and now drag it all the way out. Damn.
Yeah.
You,
So
sir,
that
have just found the inversion fair value gap.
Inversion fair value gap. So let's say, for example, we entered at the midpoint. Stop loss would be this fair
Nope.
value gaps candle, or what would stop loss be?
So your entrance is not the midpoint, your entrance is at the top. Stop loss is above the high. So right where your stop loss, yep, right up there.
Why the highs? Just because you want the fair value gap to be closed completely?
Because it is permissible for price to move to consequent encroachment of that wick right next to you.
Mhm.
And if it does, that's okay. That is, again, permissible. But then you would see the rapid drop. But here, you saw that we hit the top of the fair value gap and dropped.
Yeah. Yeah, we hit this type and then continue to the downside.
Correct. And then if you scroll to the, well, actually, you could then take that back to the 15-minute, and you'll see another inversion fair value gap.
Yeah, because I've seen these, and the problem is that when I enter with these, it allows me to catch these, which is why I started doing those starter positions.
Ooh.
But then I've noticed that out of all the back testing that we've done, I've noticed that the 0.5 has the strongest hit points, and then whenever it hits the 0.5, either it goes against us all the way to the 0.25 and then continues on profit, or it actually just goes against us completely. But then we've also noticed that whenever it's approaching, the point of this entrance is that when it's approaching us, it should enter at a slow pace. And that's when
So,
I like the trades.
right. And I completely understand that.
Mhm.
So I'm not talking about that fair value gap, the second one you drew. So when
Yeah,
I
you're
asked
talking
you
about the first one.
so the first one, but then on the 15-minute, if you scroll back, so right where you have, right, so if you delete that second box, and we're gonna redraw that. So you actually have a fair value gap. Nope. Go back to the right there. All right. Look at that fair value gap. Yep. Albeit small. Let's go ahead and draw it out. Yep. Now go ahead and drag it all the way out.
That would cut the top point.
What do you know?
Which is what I had drawn out today here, this specific section. So as
Right.
you can see, 15-minute for rally gap is the one that I wanted to catch. But you know why I missed this trade? It's because it never hit the 0.5. So it never waked me in. So pretty much I mean, the strategies are there and we've seen that these work. My problem here is that my entry points are always at the 0.5. So maybe maybe I would have to work with my emotions, as in be comfortable entering at the entry point of the fair value gap. Because remember, what if we were to wait for this thing to close, the close of fair value gap, then we will have to enter over here. So this would have never
Sure.
worked us in, right? So
Well,
the question here is, based on your strategy, what should we do? Like, there's times where we have to enter as soon as it touches, because there's times where it touches the fair value gap and bounces right off of it. But there's other times where it likes to enter, and it normally enters to either the 0.5 range or the 0.75, right? For the most part. But there's also times where it completely fills the fair value gap and then rejects from the top, and then continuation with the bounce.
you're absolutely right. Yes. Yes. So,
And then question here would be, we saw that this thing came back up, grabbed the 15-minute fair value gap from here, right? On the inverse fair value gap.
mhm.
But now that we did this, is this now mitigated to, if price action comes back here, do we use it kind of like a double top bounce, or is it mitigated because it already tapped into it? So that's just maybe a forward test that we'll have to do. But this is actually the trade I was looking forward to today. And Myron and I were actually looking at this. We were expecting a rejection zone from here. And as you guys can see, it actually never wicked us in. So we never entered this trade. But the reason why I had it here was because of that fair value gap here. And the reason why I also wanted to take the fair value gap and not this healthy order block is because this is actually not a healthy order block. Reason why is because this candle is my highest candle. And even though this candle is my highest candle, there's no fair value gap on between this candle and the fair value gap, I mean the healthy order block candle. So I like taking the order blocks that have this one on top with the fair value gap at the bottom. But in this case, it didn't. So instead, I wanted to take the rejection off the fair value gap rather than the healthy order block, right? But obviously my entry points are always at the 0.5. In this case, it never wicked us in. As you guys can see, it never wicked us in, so we missed it. Another confluence that we had here was that if we jump back into NQ, there's something here that was very important. On this specific session here, off the 15-minute, we see that we have a healthy order block. And this is, remember, this is only off the 15-minute. This is not off the 1 hour. So we have a healthy order block right here. Why? Because this order block connects into a fair value gap into this candle right here, which means that I wanted to see a tap into here, into this healthy order block, into the 0.5. And let's say, for example, if ES actually made it to the 0.5, NQ for the most part would have entered into the 0.75 or the 0.5 as well. You get what I mean? So that was just the confluence that I had. Obviously, it didn't happen, so I never took the trade. And but other than that, I guess the question for me to you would be, should I just enter it at the fair value gaps as soon as we enter them, or should we just stick to these entry points out of the 0.5?
So I think the real question is, how much risk do you have to put up to then enter right off the entrance of the fair value gap? Right?
And
Right.
that,
So
yeah,
you're looking at this from from the standpoint of, okay, I have to enter on the order block, right? What
uh,
I'm saying is enter on the fair value gap,
mhm.
which, and I'm happy to walk you through it. So this is me playing the intraday time frame, where, like you said, you use the 1 hour and the 15, but you're also missing the 5 minute.
Yeah,
So
yeah.
so um if I may,
You want to go ahead and screen?
yeah, yeah.
Okay.
Let me go ahead and share this. So if you look on my screen, I'm showing, you know, daily fair value gaps, hour fair value gaps, BISTs, SIBIs, you know, it's like a carbon copy of anyone who's watched ICT's mentorships.
Yeah.
Same kind of terminology, and I'll throw the book at you too. But so let's say we're on the 1 hour, right? We really like the 1 hour up here. Okay. Why are we wanting the 1 hour? Okay. Well, we saw that there was this fair value gap, right? Right up here. Okay. Now, I'm going to go ahead, copy all this over. I'm going to guess it's actually about right here. Let's see if I'm right. Dang, I was close. Oh, well, that makes sense. Yep. So slammed right through this fair value gap, right? This was Friday. Okay, we come into and we grab liquidity on Friday. Test on Monday. excuse me, on Monday, consequent encroachment, we fly. Okay. Now, here's the fair value gap everyone missed today, right here. This was and if you recall, everyone was like puts. I'm like calls.
Yeah.
Right here. Now, why? Boop. Smacked it and ran. So we pretty much caught the low of the day and rode it almost rode it all the way up. Oh my gosh, I wish we could have. That play went over 500%. But we took calls all the way up here. We saw that we went down towards consequent encroachment of the daily BISI. And we can kind of see. So the consequent encroachment is halfway. We see how price really respects that level. So we come down, grab the daily fair or grab the 1 hour fair value gap, the only one that is left besides the order block over here, run all the way up, take out the start to hit the buy side. Okay. Huge wick all the way up, ran straight through the fair value gaps, all the way up, all the way up. Now, let's talk about right here. We see, okay, we are taking out buy side, but what does this really mean? Okay, what is this? We are in the midst of an order block, and price just kept running. Why? It ran into that 1 hour fair value gap and rejected hard. But let's go down to the 15-minute. What about that 1 hour fair value gap did it run to? As we saw, right up here. I bet that's the 0.75.
Point 0.5.
Yeah, point 5, absolutely. Yeah, very close, very close. It's like it was one tick off from 0.75. But that goes to show, okay, so we saw, what you had initially described as a healthy order block, right? This is the inverse fair value gap. We run up into it, reject. Now, we can see we thus created an order block of another order block. So let's take it back to the 15-minute. Took puts all the way down, grabbed another 100% play, called it a day from there. We see we came down, created a displacement, albeit not much, still enough. Okay, this is still enough displacement that we're good. Created, again, more displacement. So again, that's on the 15-minute. We look on the hour, we created quite a bit of displacement. Okay, so now let's say we're now at 2 o'clock Eastern. We have our fair value gap. Do we have another entrance to the downside? Well, yeah, we do. Consequent encroachment, or you could take it from here and eat the 9 to 10 bars. But if you did so, you are heavily rewarded with about 60 bars. Then come back up. So now that we know this area over here, we come back up. We don't quite fill the fair value gap. We have a little bit more up here. And then we took the downside coming to consequent encroachment of our sell side liquidity. But now we have a liquidity void that is going to need to be filled. And as we can see, more liquidity to the downside. So I'm very intrigued to see what is going to happen today. Extremely intrigued. I believe we are going to take this fair value gap. Maybe not this first one, but definitely this second one is going to get taken. But we could
Let's
also
see.
go down to the 5 minute and see just how well respected these fair value gaps are. So I've taken heed to what you have said about the healthy order block. I want to go revisit the in, inversion fair value gap and began to really study it. Okay, so what's missing? We have been searching for that for a while now. What's missing? And it's the 5 minute because we take the 1 hour, we take the 15, but we don't look at the five.
That is true. I normally do my entries based on the 15 since I do 1 hour and 50-minute charts.
I think it's time that we add the 5 minute.
And look for the either the fair value gaps in that area for more of a sniper entry or
Yes, actually. Yes.
less risk at that point. Because I mean, the reason why I'm able to take these trades are because I play micros, right? So my stop loss is the micros allow my stop loss to be at a much greater wider range.
Of course.
But if we were, let's say, for example, we were in minis and actually went against us, we're looking at minimum $1,000 with one contract normally.
Wrong, actually. Because you're taking the displacement off of this entirety
Yeah.
right up here. I'm not. I'm going all the way back into here and saying, okay, where do I want price to go? So we saw the 1 hour. Let's take the 15 minute. Would you look at that? You ate a whole 5, 6 bars. Whoops, that would be the wrong one. Wrong week. This is this week. Okay, so you're right here, still not seeing the displacement. There's got to be something. There has got to be. Right there. You ate 3 bars against you. Then if you go and look here, trade up into it, even if you got in at the ground floor, 3 bars against, 3 to 5 bars against.
Yeah.
I'll take that any day. We could even go down to the 1 minute. For something even more precise. Let's see, is that a volume imbalance? Do not tell me that's a volume imbalance. You would have missed by 2 ticks. So And you can say, hey, you know what? This fair value gap right down here has not been filled. I'm gonna take it right here. Okay. Now you have less than 2 bars against you. I am very okay with that. Are you okay with that? I'm super
Yeah.
okay with that.
What would your stop loss be in this case?
My stop loss, God, since we're on the 1 minute, I would actually put my stop loss right up here. Less than 10 bars.
Yeah.
So if you're
Yeah,
trading
it's
one
just
mini,
yeah.
that's
1
less
minute
than two
wouldn't
hundred
be
dollars
too
risk.
bad.
What's up?
Yeah. Yeah, 1 minute wouldn't be bad in that setup.
Exactly. And
Tight
then
stop loss.
yeah, and then let's see. But what would you have enjoyed? 60
Massive
bars if you got out
profits.
here when it ran back through the 1 hour for value gap. So over $1,000. That's a 1 to 5.
Mm-hmm.
Or if you really want to take out, get close to the lows, you're looking at over 100 bars. So 1 to 10. So there's a lot there.
I do want to touch into a different topic here.
Sure.
Um, Going back to that sell side, the fair value gap that everybody was technically taking puts still for the continuation to the downside, and you went ahead and did a call out for the upside, right? On that
Oh
fair
yeah,
value gap.
right down here.
Yeah. So I actually did have that fair value gap drawn out, but I actually had a different setup that I was curious about. I did not take this trade whatsoever, but let me go ahead and stream this so I can show
Yeah,
you.
absolutely.
So I've been watching this one video that I got sent by Mirren. Yeah, Myron, and he three mentorship where it was previous day high, previous day low. Looking into the New York session from 1:30 to 4 p.m., right? And I understood the video, which I'm still going back. I already seen this video 3 times already, and I'm still going back to it. But if I understood it correctly, we know that the previous low, normally what we expect is that if it runs down the buy side liquidity, we expect it to come back down and grab the sell side liquidity afterwards, right? If I'm right. So based on what I understood, I had these drawn out today, and the fact that we went up here during the Asian lender session, we took out the buy side liquidity first, came back down, but we missed to grab the sell side liquidity. When we went back up on the second day, we saw that the buy side liquidity was never taken out, but the sell side got taken out on this drop here. I had this previous day low from Monday. I believe this was Friday. Yeah, from Friday. And it hit this specific section here. And then it automatically went all the way back up here. So I saw this fair value gap you had up here from the 15-minute. I saw this guy, I saw the consolidation. But at the same time, my question here is, could this been a valid play based on this, just watching these liquidities, or is this just something for a different setup that he talks about?
Right. Well, there you have relatively equal lows.
Hmm.
So when you have relatively equal lows, absolutely, that's a magnet for price to run through it. But you also have to see it and say, okay, well, if we have relatively equal lows, I should not expect price to run directly through that immediately, but rather I should expect price to want to take everyone else on the buy side out and then come and take it.
Yeah.
So, many of the things that ICT teaches is that more to think like market makers, right? Think like the algorithm. And to think like the algorithm, it's how can I give the most false hope and then rip it away, right? Like
Yeah.
how many people sold short on that third time it dropped? Truthfully, how many people do you think sold short?
A lot.
A ton of people. Yeah. So
Yeah, a lot of people went in here shorts for sure.
exactly. I mean, they went in shorts with everything they had.
Yeah.
And, that small
And
little retracement was enough for everyone.
I mean, we witnessed this today with a couple traders.
What's up?
No, I'm saying
What?
we witnessed this with a couple traders that shorted this section here.
Oh, yeah. Oh my gosh, it was a bloodbath.
Yeah.
But,
So that was
it,
something that was witnessed today. Obviously, sorry.
oh, it's all good. I was just gonna say it's a learning experience. After you see it, it's hard to then look forward without ensuring that, hey, have we really covered everything that we could have?
Yeah, that is true. Hmm.
Well, looks like our time is
We
just,
have less than 1 minute.
yeah, looks like our time is just about up. I want to thank everyone for joining. And until next time, we will see you then. Take it easy, y'all.
Yeah, take it easy. Take it easy.